Welcome, everyone, to Westcliff University's Distinguished Innovator Speaker Series. And our last speaker in our spring series, David Friedman, Vice Chairman of Tech Coast Angels. He and I will be talking about effective messaging skills, or more specifically, how to give that perfect elevator pitch. Being able to effectively, concisely deliver a message and sell your idea is something I consider an essential skill set for all aspects of business, including job interviews, committee presentations, and today's focus, how to impress seasoned investors in the shortest amount of time. David Friedman is a recognized expert in the art of delivering an effective elevator pitch. I'm Dr. Barry Sandrew, Director of Entrepreneurship at Westcliff, and your moderator, and I'm really happy we're all able to join us this morning, and we'll get to David in just a moment. But first, I want to briefly introduce Westcliff University to those in the webinar audience who might not be familiar with the institution. Pictured here is our campus in Irvine, California. Westcliff is an accredited private institution of higher learning with over 4,100 students enrolled both live and online and on campus. There are 4 colleges. The College of Business offers bachelor's, master's, and doctoral degrees in business administration. The College of Education offers a BA, a master's in teaching English as a second language, the Real Intensive English program. The College of Law offers a Juris Doctoral degree, and the College of Technology and Engineering offers BS and MS degrees in IT, an MS degree in computer science, and an MS degree in engineering management. We also offer a full stack coding bootcamp certificate and a cyber certificate, the cybersecurity bootcamp certificate as well. To learn more about Westcliff, including our awesome undergraduate athletic program, I want to invite you to visit our website at westcliff.edu, as well as Westcliff University on Facebook, Instagram, Twitter, and LinkedIn. First, I want to mention Tech Coast Angels. It's a not-for-profit organization that's been consistently ranked as one of the top 5 angel investment groups in the U.S., has been fueling the growth of innovative companies and supporting entrepreneurs since 1997. TCA identifies mentors and funds early stage and startup companies to help get their ideas to market. TCA members devote their time, expertise, and capital to help companies successfully grow. TCA currently has more than 425 seasoned investors and entrepreneurs as members, representing a wide spectrum of industries. And now, David Friedman, Vice Chairman of TCA, he's a leading technology, marketing, and operations executive for Fortune 500 technology, software, and services companies. He's the former president of TCA Orange County, and he's now vice chairman of the entire Tech Coast Angels organization. He's also senior consultant of the Small Business Development Center. With more than 30 years in the technology arena, David's marketing and strategic management expertise brings added value to the Tech Coast Angel network and his portfolio of early stage companies. David, great to see you here.
Yeah, great to see you too, Barry. I mean, it's interesting. You said more than 30 years. It's a lot more than 30 years. So a lot of this is based upon experience of many years of listening to pitches. So I'm looking forward to this.
I must have picked up an earlier Google.
Yeah, like 20 years ago, right? Yeah. But, it's funny. Over the years, I've been a member of TCA for probably going on 14 years now. And each year I listen to more than 500 pitches. I think one year I listened to well over 1,000 pitches because I was running screening for Tech Coast Angels. Thankfully, Volker Hutter is now running screening and has taken on that role. But as I went through all these pitches, and we just did a screening yesterday that you participated in, I was thinking back upon what makes a good presentation and what makes a good pitch. And many times I was sitting in these screenings, I'd look over to one of my colleagues, or they'd look over to me and they'd ask, do you understand what they're talking about? And I would say, not really. And it's kind of happened in maybe 1 out of every 5, 6 pitches that you really don't understand it. And as the entrepreneur presents, and as we listen, and we're starting to try to figure out what he or she is talking about, they're already on slide 7 or 8, and we kind of lost them, and they've lost us as a potential funder. So about a couple of years ago, somebody asked me, well, how do you do this really, really well? And part of the practice we have at Small Business Development Center and in my own consulting practice is teaching people how to pitch. Now, I was never an expert on this. You know, many years ago, I was probably back in 1987, I was an executive at Ameritech, and I took a course in Chicago with Communispond. And in the final exam, they asked us to present to a bunch of press who were theoretically neutral. So I gave my presentation, my final exam, and I thought I answered the question right. And all of a sudden, the person who had just asked me the question looks at me and says, "You're full of," and all of a sudden, being a New Yorker, I said, that's not gonna sit well. So I went right after that person. Totally lost it. And the unfortunate part, it was immemorialized on a VHS tape. Thankfully, we don't use VHS anymore, so I can't relook at it. But I realized that there's something in the way you come across to people that makes a difference. And several years later at US Cellular, there was a gentleman named Trip Frolickson from Media Masters who taught us this thing called the message map. And I'll share that with people later. But as I look back upon all these experiences, my own included in trying to pitch, as well as listening, it became clear that there's a system that can be put in place that I think would work well for most people. Doesn't work for all, but I think it's something to consider. So what I want to do today is share with you that system, share with you some of the tools, and take questions. I think that would be useful. But let me ask you a question, Barry. What are the 3 words you want to hear from an investor when a person gives a pitch?
Tell me more.
Yeah, well, you probably cheated. You were looking at my little notes, but yeah, but you know, it's interesting. And that's true. And that's exactly what you want to do. If you go to the next slide, you'll see the tell me more part. But anyway, many of the entrepreneurs think that angel investors are a bunch of old, fat, rich people, and they basically have money and they're just stingy in giving the money out. But I'll explain why that's not really the case. In fact, many entrepreneurs, when I first started, had the opinion that their 3 words are basically give me money, but it's really tell me more. And this will make sense as we go along. So I want to set up how entrepreneurs should think about the way angels think. So the next couple of slides will give you some perspective. This is a capital sources of it over the life cycle slide, and it shows you from the early stages of investigating an idea through development of the idea, the feasibility, the MVP, the early prototype. And it also overlays the profit. When you first start off on a venture, you're basically coming up with a concept. You may put that on a proverbial cocktail napkin. And you're basically saying, this is a great idea. I love it. I'm going to self-fund it. But eventually you find out this is gaining traction. This is has some legs. Now you need additional money. And of course, you'll go to my Uncle Barry or my cousin Joe, and I'll try to get some additional funding. You may even go to some government sources, and the SBDC can help with things, in that vein. But as you're trying to get money, you're spending money to build up this product, and your profitability declines. What you basically incur losses. As you continue to develop and go into this prototype or MVP, then you're in this concept called the valley of death. You're starting to hit the major amount of losses you have. This is exactly when you go to the angels and say, I really need money for my growth. I need money for pre-seed. I've already gotten funds that I put in, funds from family and friends, some non-dilutive funding from government resources, but I need your money. And angel investors, early seed VCs play in this realm. As we fund people and as you grow, you're finding your losses are decreasing because you're offsetting some of the losses with revenue and margin. And then you're going to be getting additional funds from the angels or VCs. You're going to go into the VCs for more growth capital, more growth equity. And then as you grow and become successful and become, you wind up on the cover of Forbes magazine as the next Elon Musk, you get you either go IPO or you get banks to invest or private equity people to buy you out. But I think it's important to realize when we invest as angels, we're in this valley of death. So we want to try to minimize our negative results. I'm going to ask you a question. Of 10 companies that we invest in, how many do you think are successful? And you can define success in any way you want.
One.
And what do you define as that one successful company? What return on investment? What's the multiple on that one investment?
The multiple for the investors?
Yeah. Is it 1x, 2x, 10x, 100x?
Probably a minimum 4x, but I would imagine more.
Yeah, it's more like 10 to 15 is what we need. The reason is of those 10, 6 will go belly up, thankfully, within the first 2 years. Mm-hmm. So we'll take that as the tax write-off, thankfully. 3 will come in with something of some return, either 10%, 50%, 1 or 2x, but we really need that one to make it work out. So if you go to the next slide, we'll talk about why startups fail. And this is a slide from CB Insights. When we look at why startups failed, we see the number one criteria or the number one reason for failure is the product or service does not meet the market needs. Number 2, which you can't control by yourself, but you can control by getting funding, is the lack of liquidity. Number 3 is team failure. And number 4 is you don't recognize the competition. And there are other reasons that are listed here. But when we, the angels or early seed VCs, look at the reason, we'll look at you, we're looking at the product market fit. We're looking at your team, can they execute? We're looking at how you deal with competition. Do you have a unique competitive positioning? Where are you strong? And we're also looking at the landmines that you would face a priori so you can figure out the contingency plan. What we want to hear in your story, and I believe CEOs at this stage of raising capital are really good storytellers. You're evangelizing the dream, as the old Apple people would say. You're evangelizing that dream. You want to get people engaged. We have to hear things in a certain way. And there's a system that is taking place to do that. So the next slide shows 5 questions you want to be able to address in your story. Is there a market and is it growing? We like big scalable markets. So if something doesn't work out, you have the opportunity to compensate. Why will customers buy your solution versus another? Is this a better mousetrap or is this really disruptive? Can you make the product or service? Is this Rube Goldberg? You kludge it together, you integrate things, you have a really unique patent. How strong is that patent? A very critical part is, can you make money? But just don't show us the spreadsheet. I can make a spreadsheet lie. I can also say that based upon the spreadsheet, my value of that company is based upon an 80% salvage rate at the end in 5 years. And look how fast this business grows, because if I only get 1% of the market of all the Chinese people that are going to buy my product for X dollars, this will be $1 billion company and I will be on the cover of Forbes magazine. But that doesn't normally work. So there are other ways to value the company. We're not going to talk about that specifically, but maybe another time we could talk about valuation. But we do want to understand the logic, the business model, how you construct all the criteria supporting the business model, the assumptions. And we will look at that in our due diligence planning. Can you support the product and service? And is it extensible? Is this WD-40 or is it a platform from which you can get additional revenue streams, both maybe for direct selling as well as going through a third party? And finally, most critical, and the number one thing we look at is the operational team, the CEO, and the board. How is the operational team going to execute? And how will the boards play into that to help execute the plan? Find business opportunities, find partners. Okay. So does that make sense, or am I missing something in there?
No, it makes a lot of sense. I think the new entrepreneur, somebody who's really inexperienced, is looking for some more of the basics, frankly. How do you get the attention of you walk into Tecco's Angels and you've got 70, 80 seasoned investors. How do you get their attention?
Great segue to the next slide. This is the pitching system that I think is really relevant. And this is something that, again, when you see it, you're probably going to say, yeah, it's pretty easy to understand. The issue is, like everything else, be easy to understand, but very few people do it right.
Yeah.
So there are 4 parts to the pitching system. Number 1 is context. And that's the elevator pitch, which can stand on its own. Remember, the goal is to tell me more. So even if I'm pitching in a presentation, and I'm basically starting off in my 12-minute presentation, 15-minute presentation to the Angels, I really want to get it real early on. I want to understand that context, because without that context, we're sitting there talking to each other. Hey, Barry, do you really understand what's going on? Barry's saying, I think I get it. Is it this? I'm saying, I'm not sure, really. Is it this? We saw something yesterday, and it took through the 12-minute presentation plus 12 minutes of Q&A. And at the end, the person said, we're kind of the Uber for this. I won't tell you what the product is, but we're the Uber for this. So at least we knew it was a combination of a platform to enable people on this side to find people on that side for a business venture. Okay. And it was in the biotech healthcare system. So you want to get that real early on. So analogies kind of work. The second part is relevancy and relationship. Do you really see yourself buying the product? Do you see somebody else using it? Do you see your wife, your children using it? The entrepreneur has to put you in the shoes of either the user, the buyer, or somebody to make it either emotional or logical. Without that, there's really not much interest generated. And if there's no interest, they're not going to really invest. So you have to make it real personal. And then, of course, there's the story. How do you tell the story that makes sense? So remember, the CEO is a storyteller. And then finally, when you finish, summarize the major elements of that story.
Yeah. So basically, it's you size up the audience. You figure out the greed factor. What's going to interest them? What's going to benefit them? And then you basically have to hit them right from the very beginning.
You really do. So,
and I mentioned to you before we did this, something I call the so what factor. You get up in front of Tecco's Angels and you say, hello, I'm Dr. Barry Sandrew, and Director of Entrepreneurship at Westcliff University. The question in my mind, in their mind, is so what? If you keep doing that, well, first of all, if they're doing that after the first sentence, you're not doing well. If you do that in the second sentence, if you do that in the first minute, you might as well walk out.
Yeah, now you have a great reputation. So if you came in there and said, okay, we'll just invest in anything Barry does. Now, seriously, if Elon Musk came in and said, I have a really good idea, and Larry Ellison and I are bonding together for this, trust us, I probably would say, I'll take my shot.
Yeah, I don't think they could go.
Yeah, if Joe Schlabotnik came in and said, look, I've really put together this great team from my engineering class. We have this really cool idea that's going to build a better mousetrap. I'm not sure I would invest right off the bat. I want to say, tell me more why. So you have to intrigue me.
Yeah.
So if you go to the next page, it's basically the elevator pitch, setting the context. Because without that context, you kind of lose people, right? So the objective of the elevator pitch and the objective of every time you pitch is to go to the next stage. Tell me more. You're going to do this until the person on the other side, the one who has the money, the investor, says, hey, I don't need enough. I have enough information. You don't need to tell me more. How much do you need? And then we'll write a check.
Do you think it's possible to capitalize everything in one sentence. One sentence, like I think I mentioned this earlier. You get up there and basically say, I help X achieve Y by doing Z.
No, that won't work.
Why?
Because I'm sure there's other competitors out there, and I'll share with you a good elevator pitch. And when, if I stop short of the comparison, I don't get it, because my brain is trying to figure out what is it similar to, what is it like, how is it different than what I'm doing today? So you need a little hook. You need something called the unlike sentence. Number two, if I were James Joyce and writing a 217-page one sentence, maybe you can get it across. But what I've also found, a lot of the technical engineers, a lot of the technical people, engineers, scientists, when they're the CEO, they try to tell you how to build the watch. Now, I don't only want to know what time it is, but I want to know some components of what you're doing in building this watch to tell time correctly. You know, so I need to understand something more. So it's usually a couple of sentences that get to the highlights.
Yeah. Well, I've also heard some people say that you should start out with something unexpected. Have you ever heard that?
I think I've heard it. I mean, it may work. I mean, but if that unexpected thing is not relevant, then it doesn't make a difference. So let me talk about the components and share with you what I think is a really good elevator pitch. And this is pretty close to what I heard probably going in about 8 years ago when somebody came to pitch to TCA. And I remember it pretty much. So I'll share with you what a good one is, and I'll show you why it's a little different than what you're saying. I'm not saying what you want to hear is not right. I just think you can do more. And an elevator pitch, depending on the height of the building and the speed of the elevator, it could be a 6-story building like where I grew up in New York. And then you have basically 30 seconds. We had a slow elevator.
That's a good point. We're doing elevator pitches here at Western University, and the amount of time typically, I mean, with Tech Coast, it's 12 minutes plus 12 minutes Q&A.
Yeah, but the elevator pitch is 30 to 45 seconds. Okay. There's a difference because the story is 12 minutes. Okay. But the elevator pitch starts the story. Okay. And then you go into peeling back the onion. And then you go into what we call the message map to create that story. And I want to show you some tools that'll work. Okay. So the elevator pitch goal, tell me more. The team and the problem are really the anchors of this 60 to 120 second pitch. Could be a little smaller, could be shorter, could be longer. And many times, if the people online have never gone to a pitch fest or a pitch contest, go to them, you'll hear these 2-minute, 3-minute, 5-minute pitches. The elevator pitch gets smaller, longer, depending on your audience and what the goal is. If you have a really strong team, start with the team. I'm Elon Musk, and I brought in Larry Ellison, and we're coming up with this new system that integrates electric batteries with your home automation system using the Oracle software. I would probably say, got me on that one. Good, strong team. I'll take my chances. Remember, the number one thing is the team and the execution of that team and the CEO, whether or not that CEO can execute and bring the team together. If you have a really strong product or IP, and we see a lot of these coming out of the universities, very strong IP coming out of engineering, out of the health sciences area, start with the product and the service. Make sure it's relevant to them. What are the elements? Who are you? It would be nice to know. Start with the name of the company, obviously. Who is the target market? Is this for everybody in the world? Is it for a specific target market? Where's your focus? What's the essence of the product? What's unique? Why is it different than the competition, and how is it differentiated? And that's where you use this concept called unlike. This is what we do, but unlike the competitor, we do it this way and we do it better. And then if you have time, if you have more time in the elevator pitch, higher elevator, you're going up to the World Trade Center, tower, you may want to throw a little more in the team, how much revenue you'll get, what's the essence of the deal, and very critically, when are you going to liquidate? When are you going to have an exit? Because we only get money and make money as an angel based upon an event, a liquidation event. Okay. Yep. So let me give you an example. Do we have any questions, by the way, so far?
We do.
Well, we can take a question before if you want.
Here's one. Let's see. How has monetary tightening, a slowing IPO market, the valuation of the VC market shrinking affected how you as an angel investor see potential investment opportunities?
Well, we get a little more cautious. Personally, when the markets had gone down over the past several weeks, I already committed to an investment, I said, oh, shoot, how do I get out of it? Because there's only a limited cash flow. However, when you really think about angel investing, even true about VC, we have a fund, we contribute to the fund, so we put money aside early on, we don't care. Angel investments are normally 5 to 7 years. So we're not looking at volatility in the instant market to really care about. So while it's important, we normally, at least I do, as well as some of my colleagues, put a certain amount of money aside for these long-term ventures. Because when I look at my own portfolio, I have my core, investments, I have my structured notes and my options trading for income. I have my momentum stocks that I play, market timing, and then I have my angel and alternate funds for longer term, higher risk. So I've already committed a certain amount of money per year to doing this. Now, I may get a little more, that's somewhat fluid. It may go less, it may go a little more for my commitment, but I usually don't care. Many of my colleagues don't care. Some because of liquidity issues, depending if they're in the real estate market or maybe they're doing other things in the stock market. They may have a little more rigidity in terms of what they're going to spend. But normally it doesn't affect. We haven't seen that. In fact, interestingly, when the markets crashed in 2020 because of COVID, we saw our best year ever in terms of investment, both in terms of the amount in our funds as well as the amount of sidecars we put in.
And here's another one. In reference to market existence, Apple customers didn't know they needed or even wanted the iPhone until they experienced it. Steve Jobs created a brand new market. So how can you pitch a potential market?
Yeah, that's always the one that's difficult. So when you look at product development, you look at things like line extensions, minor, major line extensions that make things bigger, faster, whatever. In a sense, like how did you know you needed an electric car? Okay. How did you know you needed Google? How did you even know you needed TV before it came about? So what you have to do in cases like that, they're called discontinuous innovations or new to the world innovations. You have to be able to spend money to, quote, shape the market for that product. Well, look, I did internet on the airplanes. How did people know they wanted internet on the airplanes? This is when I was at Boeing.
Yeah.
Okay. Now, we did know that there was entertainment on board, but this was a little different than just entertainment.
Yeah,
because we were using.
I stress the fact that you were instrumental in actually creating the internet in airplanes. That cost everybody a lot of money.
Yeah, it was very expensive for Boeing at the same time. But yeah, but back in 2003, now I didn't start it. It was started by the people in Boeing, but I was brought in to do their direct marketing and sales. So I helped actually commercialize it. I was on that first Lufthansa flight that actually made the first call. So it was really cool. So I commercialized it, but to really understand, that was discontinuous. We were trying to tell people, you want to work on the plane. You want to be able to download these things. So we had a vision. You want to be able to see things. We actually broadcast a Germany versus South Korea World Cup match on board. We had 117 people on a Lufthansa flight watching Germany beat South Korea at the same time, which was surprising to me because we were using satellite. I was shocked because the system, the math said we couldn't get that many people watching it, but people just were ecstatic and jumping up and down. Anyway, it was kind of interesting things, but you do it by shaping the market. So what we did with shaping the market for the internet, we did a lot of work before we introduced the product. Why do you need it? We see the same thing true in the healthcare market. I just invested in a company called Single Pass. Do you really need this handheld device for electric cauterization for doing biopsies? So they're going to have to change the standard operating procedure, the minds of the doctors. It's kind of a discontinuous innovation, although they do use cauterization now. but you have to be able to do your work up front to make sure people understand why this is better, why it's different, and where it's going to go in the future. That's the evangelizing. Where do you see this going? And it's not non-trivial. I mean, but it does work. You do have to do it. You just can't throw it out there and pray. But there's one other concept that's afoot there. You have, there's a thing called the diffusion curve. So it's an S curve. Early on, you find those innovators, those what they call lead users. You find them, you coddle them, you make sure they use the product and service, and then you use them as reference selling as you go into the next bowling pin market. It's like crossing the chasm. If anyone's familiar with Jeffrey Moore, that is still applicable today, especially for discontinuous innovation.
Got it.
All right. So let me go back to the elevator pitch.
Yep.
This one, true story. And when you think about this, all you online, think about your elevator pitch and think about this one. And does it hit home? My name is John, and he mentioned his company before this, but my name is John, and I have a PhD in microbiology, and I've worked for the largest pharma companies. That gets to you, who, so what, big deal. But now it changes. My brother, sister, and mother all had cancer. I have a goal to help them and others fight this disease, and I won't stop until I'm successful. That's passion. That's, direction and vision. I developed a diagnostic test based upon a sample of blood that is unique in the market using CAR-T. Okay, now I have my product market fit. The cost is less than $10 per test. Benefit to the user for the individual. Unlike, this is the real key, now I'm starting to say, well, why do I really need this? Right? Now we say, unlike other screenings and tests, you don't need a doctor's prescription, and you can do it in the privacy of your own home. Okay, this is like the test for occult blood, that you see on screen these days on TV ads. You can do it in the privacy of your own home. The tests have shown a 98% success rate on detection and can be used as a standalone or as in conjunction with other lab tests. Now I have, who I am, what I do. I understand the business that I'm working. I understand the technology. I understand the target market. I understand why it's different than anyone else, and I've seen the benefit. That's all done in 35, 40 seconds. Now, the question is, if I listen to this pitch, will I say to the entrepreneur, tell me more? Now that person this is the beginning of his actual story. And I was really intrigued because every one of us is touched by that. Now, go to the next slide. How do you make this now relevant? So now once I have this pitch, tell me more, I have to really build this story and make it relevant. There's a connection part. So I need to build rapport with the group, and I need to make it personal. In the case that I just gave, it was personal. Everyone is touched by cancer, or everyone knows somebody that has had cancer, and it's unfortunately endemic in our society. So you want to use words like, imagine if you had cancer, what would you want to do to find out how to cure it? Imagine your wife wanted to buy this product. How would you do this? I have a company that I mentor. It's called Seekers. In fact, he's from your group up here, Manny Tully, right? And he is going to present eventually to TC. And we were working on his elevator pitch. He offers he does lifestyle clothing, for the millennials and Gen Z.
Oh, Manny, yes.
Yeah, Manny. And, I'm not of that generation. Now my kids, hopefully my grandkid will be, but how do you make that relevant when he's pitching to people who are in the 40s plus? He has to make that connection. So we worked on the elevator pitch, and he would start with, imagine your son wanted to buy a $350 pair of used Air Jordans. What would you think? Where would you look? How would you determine whether or not that is a valid Air Jordan or it's a knockoff? And now you as an angel investor are starting to think, did I actually have that? Yeah, my son actually wanted that. I thought he was nuts, but I wanted to try to help him. Yeah. Now I'm making it very personal and building that relationship. Okay. So you want to use these terms such as imagine, or do you have the following problem, or can you see yourself in the situation?
And in that particular industry, it happens to be second only to Nike, I believe, in terms of market value, correct?
Which one?
Manny's target, which is
well, his target market is huge. Nike would be in it as well as other companies. There are several companies that offer a marketplace. Yeah, they would be somebody who would do this streetwear. It's called luxury streetwear.
Right. But what I'm saying is, Manny would have to put this into perspective of the larger industry for funding, for instance.
Correct. But I'm not going to give away his secret sauce, but he's done a really good job. And now, once I figured it out, once he told me, who's a person who didn't know anything about luxury streetwear, although I did buy a FUBU shirt, after looking at him on Shark Tank, James on Shark Tank. It's a different world. And then because I didn't know enough, I was trying to figure out the elevator pitch for other people like us. So it's interesting when you do an elevator pitch, you may know too much. You want to bring somebody else who doesn't know enough to help you formulate it or test it on somebody. Yeah. But the other thing you want to do in building rapport is do your homework before you meet with the people or the group. Find out whether or not that angel group invests in your business. Look at their portfolio. TCA, go on techcoastangels.com. You can see our portfolio companies. You can read our annual report that John Harbison just put out. Excellent report. All the portfolio companies, what we've seen in terms of exits, what kind of businesses we invested in, a listing. Find out our interest level. Usually there's an investment thesis or philosophy, and what prior investments have we made. And think about the people. If let's say you're in the hotel business and you want to be able to develop some hotel technology. If you look at some of the people in Tech Coast Angels, you know that Jeff Lappin, who's our current chairman, also part of TCA LA, was the CEO of a hotel company. You kind of want to understand that when you make a presentation to them. And Dave Burkus sold his business to a hotel company. And Dave Burkus is one of the great super angels, also part of Tech Coast Angels, also does the Burkus report. So do your homework and find the people who are most relevant to you, who understand your business, because people normally invest in things they are emotional about and things that they know about. Okay.
Yeah. By the way, the one side, Manny and his company is, do you remember his company? Seekers. Yeah, he graduated from our Westcliff's incubator called Ignite.
Well, that's right. Remember, we were walking around looking at the Westcliff facilities and said, hey, David, I haven't seen you in a few years. I actually met him at a pitch contest several years ago. He was just trying to understand how people pitch. Right. And then he became a client of mine at the Small Business Development Center. I've been working with Manny, and I'm really excited about his product. I think it's a really big winner.
Well, we love to see our incubator company successful. That's great.
So let's go on to how do you build the story? If you have a strong team, you start with the team. If you have a strong product, start with the product. You want to address the following elements in your own style. How you tell the story is a whole different thing. In the tempo, your cadence, which parts go before the other. There's a certain number of slides you'll have, maybe 15 to 20 slides. But how you tell the story and weave that story is up to you. Okay. But you want to cover things like, is there a market? It goes back to the 5 questions. Is there a market? Is it growing? How do I make money? What funding do I need? Is this the only funding you need, or is there more funding down the line? We did a funding for Parcel Pending. Lori Torres came to us many years ago. Lori Torres developed this concept from called automated locker. She was going to compete with Amazon, which big competitor. But she really had the background coming from the Irvine company, super good team, set up advisory boards to complement her operational skills. And in 4.5 years had an exit at 22x. Cool. Yeah, very cool. So, it works. What are the risks and impact? Now, I put this down as optional, but everybody should understand what risks you're facing. What are the landmines that are going to derail your business? And while you may not put it in the story, it will come up in your Q&A. So you put those questions and answers and those risks in your back pocket, so you'll know how to handle it a priority. And again, it gets down to, do you know your landmines that'll blow up your business and how you're going to take care of them?
Let me ask you, inevitably, when I see a student who's never done this before create an elevator pitch, there's always one slide that shows the size of the entire market being, $10 trillion market. That's totally irrelevant to what they're talking about.
It is to me. Yeah, it's to me. I mean, I think the real key issue, and I was teaching this to a variety of people in the course I teach down at Camp Pendleton, it's really not what they call the total addressable market. You can go nuts. These are crazy marketing terms. What's the global addressable? What's the intergalactic market? Well, I don't care about Martians. Yeah. What's the serviceable market? What's your, exactly. But what you really want to get to is the serviceable, obtainable market. Yeah. What can I produce out of my business? And who am I actually targeting? Am I targeting for like Manny's company? What do these people look like? How many of them are there? Now that's that bullseye. That's on that yellow. Now you may spill into other areas, which is fine. But what I really care about, do you understand who your target market is? How many of those? How are you going to reach them? How do you find them?
Yeah,
that's the real critical part. But again, it gets down to the assumptions underlying your business model, not the largesse of the market based upon trillions.
No,
it makes no sense.
And very often when I see that, it triggers, okay, this guy's or woman is an amateur. They really don't know what they're doing. This is their first time at it because it's so irrelevant and you sort of roll your eyes.
Yeah. So what also happens in that case? Well, here's $1 trillion market, and then the other faux pas is, well, I'm only trying to get 1% of this $40 trillion market. So in 5 years, I'll have $100 million business. I don't know very many businesses that have gotten to $100 million in 5 years.
Yeah.
Not even Google did that.
Yeah.
So you want to build it from the bottom up, not just make an assumption that the law of large numbers will sustain you. Yeah. If I only get 1% of all the people in China to send me $1, I will be a billionaire. Doesn't work.
Let's talk about the hockey stick. I mean, it's essential, but it's overused. Don't you agree?
Well, I think you have to, again, it goes back down to the assumptions. You'll see, you may have a hockey stick because all of a sudden it becomes like pet rock. Everyone, or Tamagotchi pets, so all of a sudden it goes low, you get the early innovators, and all of a sudden that just skyrockets. And you see more of a hockey stick with some technology. Just look how fast the adoption of, some of the new technologies like TVs, like LED TVs. I mean, it's really grown versus the adoption of telephones,
right,
or the adoptions of the early TVs with the tubes. Yeah. So it has changed, but we do look at when somebody comes in and says, we're going to have $1 million this year, 2 million next year, 40 million the year after, and 100 million the year after. That kind of hockey stick has to be justified not only by your assumption set, but also how is your organization going to grow to enable you to achieve that?
Yeah. So in other words, it kind of has to be tempered to a certain extent, because if you say if it's too extreme, it's not believable.
So how do you? So that's a great segue to the next slide. A lot of people use this model called the business model canvas. And I'm not going to go in depth, but I think it's important. And if you hand out these slides, or if people go online and look at business model canvas, it takes a very big problem. So go to the next slide, please. And the one after this is even going to be even harder to read, by the way. I'll just pre-warn you all. But the business model canvas takes the problem on what is your business, how are you going to make it grow, and breaks it into its components. It's like eating an elephant. How do you do that? Well, it's one piece at a time, right? Well, the business that you have is the big elephant. And now how do you break it down? So what this does, it focuses, I'll go from the right to the left. Customer segments, who they are, specifically, who is the millennial? What do they look like? Male, female, small, short, East Coast, West Coast, that are going to buy luxury streetwear. What are the customer relationships? How do you want to build the relationship? Online, offline, a combination. Who are the channels? What are the channels you're going to use? Who are the people in the channels? How are you going to? That's distribution. Internet only, B2B2C, D2C, direct to consumer, whatever. What is the value proposition? Now, on the right-hand side, we're in the customers and customer discovery, and now we're moving into more of the marketing activities. What's your value proposition? What is the essence of what you're offering that makes it different and distinguishable than what's out there today? Everything has competition. Let's not be fooled. There's competition online. In fact, when we did the intranet, we thought competition was the in-flight entertainment systems that you'd see in the seat back. What we failed to realize, and we finally realized it and changed our pricing, is that competition was also eating and sleeping. People didn't want to always have this thing on their tray. They had to eat and they liked to sleep. So we changed our pricing to allow people to buy it in smaller chunks. So that was pretty smart, actually, after the fact. But we didn't know it until we actually saw the customer behavior. What are the key activities you need to do to affect your plan? What are the key resources? Who do you need in terms of people on your team? Who are the key people? Who are the key partners? And that's the left-hand side. Then it goes into what is your cost structure? What are your revenue streams? We like to see multiple revenue streams, or what we call routes to revenue. And then who is your competition? And again, who are your partnerships and other alliances that will help you? Okay. When we go into the next slide, you'll see how you can disaggregate this and build it up. And then we'll get into how do we put this all together? Because this information is used to build what we call the message map. I'm not going to read this. It's available. You can scan it with your eyes. But fundamentally, I'm filling in the components and breaking down your business into disaggregated parts that are easy to digest. And you can put people in charge of each part. So let's figure out a way to look at the message map. Okay, so let's look at the message map. And this is the last part, and then we'll open it up to all questions. A message map is a simple way to structure your story. There's a thing called a home base, the essence of your business. This is like the essence of that first paragraph or first sentence in the elevator pitch. I'm using and I'll show you an example of it. It's fictionalized true story of a former client of mine, how he wanted to do something to compete with Angie's List. What's the basic message you want to get across? What are the supporting pillars? When you build a house, you have walls, you have a floor. Those are pillars. Now I want to get into, in those walls and in those pillars, what are the specific proof points that say, I have this, I understand it, and I have it under control? Is it a wall that is with stucco? Is it open? Is it glass? You know, and what kinds of things needed to support those structures? And what are the, you know, again, it's the proof points, and I'll show you what that is. So in designing, the next slide is the message map design. Okay, so home base, pillars, proof points. And usually in constructing this, and you can use this in developing your actual story, the 12 slides for the angels, or you can use it when you talk to the board or alliance partners, and these vary. You can even use it if you're looking for a job, because you, in a sense, know, you know, who you are and the essence of who you are. Hi, I'm Barry Sandrew. I have a PhD, and I'm really excellent in terms of logistical management of blankety blank. Okay, and I'm going to tell you how I'm supporting it with my experience, in my background, you know, my ventures, whatever. So I only really want to set up my home base, what my basic concept is, which you can always go back to if you wind up with a problem and you get screwed by somebody saying, you're full of you know what. You go back to your home base. That's what I learned. And I wish I had learned it before I took my final exam. And then you get into these 3 to 5 different elements. In this case, I put it as 4, and you'll see why. In this case, it was like an Angie's List competitor. And we called it Aardvark. That's a fictionalized name. It was actually a different name. Aardvark offers 3 levels of service, scheduled, on demand, and do it yourself, from qualified and responsible suppliers at a cost less than other competitors, and for both users and for suppliers. Okay, that's the fundamental home base. So if I ever wind up with a problem, let me go back to the fundamentals of what my business is about and reset. Okay, and always have a good FAQ set of questions in your back pocket that you know that angels will ask, that you heard before. You can use your team to come up with them, or as you go through pitching to different angel groups, because you may not get money on the first shot, they'll ask you questions, put it down, make sure you know the answers the next time. So how do you fill this out? If you go to the next slide, we'll show you how you fill it out. Home base stays the same. And in this case with Aardvark, we looked at 4 elements: technology, that's the IP, the product market fit; the team, really critical since that's one of the reasons for failure, also the number one reason why we invest; the customer or market, who am I going after, what's the customer discovery, will they buy, and of course the financials. Always have to have something on financials, always have to have something on team, always on your product, always on the customer. And in this case, my pillar on technology was 3 patents that we had. Middleware to connect to suppliers, we put it on their systems. We were able to integrate with their current systems. And an accounting and authorization system called AAA to enable us to do things for the suppliers to offload some of the work that they didn't want to do. In the team, in this case, the CEO started a prior $1 billion company and sold it off. You had operational execs with 40 years experience. And then when we looked in the financials, EBITDA growth over 5 years, we had a great business model with 3 different routes to revenue. We had to do it yourself, on demand and scheduled. We have obtained $500,000 prior investing money from somebody. And then the customer, large market, CAGR with a 20% growth rate. We had some statistics from, I think, Gartner Group at the time, or Forrester. We had customer testimonials, and we went through a good competitive analysis and positioning. This is your story. When you literally, and I'm a pen and ink guy, I mean, I still use fountain pens on paper, okay? But I actually write this down by pen and ink, and I can literally have that connection between writing it and seeing it in my mind. So whenever I'm pitching, this is what I can see. So if somebody asks a question and I need to look at it, or need to remember something about it, I know exactly these are my major elements that I want to get across. And I've gotten good enough over the years, and I've seen people get good enough using this technology or this technique to build up their pitch deck, to tell the story in a way that makes it make sense, that's cogent, that's relevant, that builds the relationship. So you use the pitch as a reminder of why you're investable. Again, you want to set context, because we want to get interest early on for the angels or the other investors to say, tell me more. Even in the pitch, the 12 minutes, the first 30 seconds, do I want to listen to the rest, or do I want to go on and watch YouTube videos while you talk? Okay, tell me more. Yeah, I'm interested in this thing. How do I build, the relationship and relevancy? Barry, I know that you're really interested in gun control, big subject today. I have a system that will help prevent, these indiscriminate use of guns. Okay. That would be very relevant today for a variety of reasons. Okay. It may be something entirely different. And then you tell your story with these components based upon this message map. And then you put up the final summary slide. Why is it investable? And the areas you want to cover, because this is the way we kind of evaluate companies. Team. Expert team, several exits, team has been together for a long time. That's 30% of our 100 points that we give out. Number 2, the opportunity. Is it mass? Is it a lifestyle business with a few customers? Or is it a scalable market that can not only go beyond California, can go national, can go global? Scalable businesses with multiple revenue streams make sense. Is there a good product market fit? Can you explain it? Do we have the right technology to make it work? Is it disruptable? Is it a disruptive technology? And if it is, how are you going to shape the market for that? Do you have enough money in there to really be able to do that? Who is the competition? Why is it unique? And how can you sustain the advantage? And then what are your marketing and sales plans? And then anything else. But notice the top, you have more than 50% on the team, the opportunity to throw in product market fit. That's fundamentally what your business is. Your story needs to be able to be convincing. And then when you say, I'm finished with my pitch, you may hear, tell me more, let's go into due diligence. And the angels will peel back the onion even further, asking you some harder questions. Or they may say, and I've heard this happen, there was a pitch one time, it was so well done that one of the investors next to me, I won't mention his name, said, I'm going to write you a $50,000 check right now.
Yeah.
It doesn't happen real often, but in his case, You don't have to tell me more. I am convinced, but tell me more until they're convinced, and then it'll make it easier for you. And that's the whole pitch process. You know, context, relevancy, story, summary of why it's a great investable deal.
One student asked this question, it's pretty cool. I like it. Actually, it has to go with what I mentioned about the sizable market. What are some suggestions of what never to say?
Oh, yeah. Well, I think we covered some. Don't say, if I could only get 1% of a $10 trillion market. That would be a bad thing. And don't be arrogant. We've had people come up there. We like coachable CEOs because we want to, at TCA, help mentor and help the growth of the company because it's to our advantage. Don't tell me you know everything and we don't know anything.
Right.
A lot of these people, my colleagues, are very, very smart. I learn everything. I learn something new every single day from somebody. I mean,
yeah, especially for an angel group, you have to show that you're coachable, frankly.
Right. And one thing you don't want to do is bullshit us. Tell it like it is. And if you don't know an answer, say, I will get back to you, and get back to us.
Here, whenever we have one of these distinguished innovator speakers, we always like to leave with 3 takeaways. Can you give me one? 3 would be great. Can you give me one?
Yeah, I'm gonna give you a quote from Mark Twain. Mark Twain wrote a letter to somebody, and he said, "I am sorry this letter is so long, but I don't have the time to make it short." Yeah. Work on your elevator pitch and make sure that it's cogent, tested out. That's a very, very critical thing, because you'll need it in one way or another, either in talking to somebody you meet at random. I meet people at random all the time, and I always have an elevator pitch for TCA even. And I modify it depending on if I'm looking for new licensees, or if I'm looking for new members, or if I'm looking for entrepreneurs. My message map I've constructed in my head, well, actually it's on paper, but it's also in my head, will be a message map for angels, for new angel investors, for new licensees, and for new businesses that we want to look at.
Very good. David, I've heard this, a variation of this in class, because you've given this as an invited speaker to a number of our entrepreneurial classes here at Westcliff. And every time I hear you, I learn something new. This has been absolutely fantastic. And from the comments I'm getting, there's a lot of people who got a lot of great nuggets out of this as well.
Well, if you can get 1 or 2 nuggets out of this, that would be great. I just want to also remind everyone, TCA, or the Small Business Development Center, is here to help companies grow. We have a couple of tech centers in Orange County, and they're all over the country if you're not in the local area. Look them up on the web, work with them, they'll help you grow. Also, Tech Coast Angels does have a variety of different events during the year. Check on our calendar. We do have face-to-face with entrepreneurs. We do have and participate in pitch contests. Don't be afraid to come up to any of us and try to do a 30-second or 45-second pitch. And don't be afraid of us. We have a goal. We are, sure, it's our money, and sure, we're very stingy with it. We want to find those great deals. But we're also here to help and try to help build up the entrepreneurial ecosystem in Southern Cal, working with people like Westcliff and others.
Yeah, it's
so
been incredible.
We want to help.
Yeah, we're hosting your screenings every 2 weeks here at Westcliff. It's been incredible for our students and our faculty. I mean, it's basically Shark Tank. Every 2 weeks. And
but we're a nicer, kinder Shark Tank. We're not like we're better than Mr. Nice Guy.
Well, yeah, this is real life Shark Tank.
This is a real life Shark Tank with our money.
With your money, exactly. So I want to thank the audience for attending, and I want to thank David Friedman. And if you want to get in touch with David, please just get in touch with me. There's my email, and I'll refer you. Thank you so much for joining us. And David, thank you.
My pleasure, Barry. Thank you.